Good day, good morning, good afternoon, good evening. I'm very happy to see you here today. One of the things that I try to do in these weekend market recaps is to go back and see how I analyzed the market in the previous week and then observe how it played out. Why do I do that? It is a way to impart confidence in trading. Confidence on what? Confidence on building trust on what we see using analytics that is based on robust definitive data. And that confidence is very important for successful swing trading. The market never goes up in straight line, it never comes down in straight line. It will invariably, more often than not, after we buy, it will pull back. May not stop us out, but it will pull back. And after we short, it may not stop us out, but it will go up. And it needs confidence on the system and the techniques to hold on to the trades to its fair completion. What is fair completion? Either to hit the stop or hit the initial profit target. And that confidence only comes from actually two things. One is observing the system and the technique playing out over and over again. And secondly, actually trading based on that. Actual trading is essential to build the final confidence. This confidence I try to impart not only to all the viewers of the videos that I create every week, but also for myself. We need continuous reinforcement in the face of market's adversity, meaning up down swings, to stick with the system. And this is one snapshot from previous market recap from Q Edge, and this is exactly what I mentioned in the last market recap. I pointed to a unique way of looking at the market and seeing whether it was overbought or not. That was by looking at the percentage of stocks above upper Bollinger Band and see if jumped up too much in one day. How much? Anything more than 10%. And right on last Friday, I showed that it jumped up from, you may not be able to read it clearly from this snapshot, from 7.2% to 19.5%. That was a jump of more than 12%. And this is exactly what I mentioned, that this was too overbought. This was the most important signal that I shared in the last market recap regarding the market being overbought. Remember this percentage, almost 20, 19.5 to be precise, percentage of stocks were above upper Bollinger Band. Which stocks? S&P 1500 stocks. That is a nice mix of large, mid and small caps. We'll come back to Q Edge, this program, using live system shortly and see what is that percentage now from 19.5. Where did it come to today? Greetings, I am Sagar Nandi, retired IT professional, swing trading stocks for a living, based in Thailand, but I trade in USA and India markets using Q systems and techniques that I developed. You may contact me using my email IDs, any of them, info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, YouTube channel Trading Profitably, where if I share trading ideas, I try to combine the forces from all the dimensions, that is technical dimension, market level strength weakness, sector industry strength weakness, fundamentals, and even seasonality sometimes. because I combine all these forces, they tend to be really high probability trades. And again, I have a habit to go back sometimes and look at the stock ideas I shared to see how they played out. And of course, they are publicly available on my X handle and YouTube channel. You may always go back and check them out yourselves. Why? To build confidence on the system and the techniques if you would like to. These are the Q systems I use. I'll use many of them in today's video also. All the Q programs run on Metastock platform. That's why I love it. I can use only a single platform for all analysis. And because I trade actively in the USA market, I have the technical analysis part on the TradeStation brokerage platform as well. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk, even only you are solely responsible for the outcome of your trades, and of course I am responsible for the outcome of my trades. Options trading can be risky. As I always say, it does not have to be. I use them all the time, but I manage my risk. You may refer to the characteristics and risk drops standardized options document from OCC to decide if options trading is suitable for you. I always mention that reading itself will not be enough. You will have to try it out probably before knowing whether it works for you or not. And along the way, learn how to use options without taking too much risk. That was the last line. Let's look at QH. Remember the percentage of stocks that we saw above upper Bollinger Band last week? That was 19.5. Here. If I can project that slide back. 19.5. It was 1 week ago, last Friday, 19.5 percentage of stocks were above upper Bollinger Band. What is that percentage now? Only, I'm using that term relatively, 2.9, let's say 3%. So from 20% it came down to 3%. What does it actually mean? It means about 17 percentage of 1500 stocks. That's a lot of stocks that pulled back from above upper Bollinger Band overbought situation to a non-overbought situation. And not only that, if I am able to project that picture again from last week, it not only turned less overbought, but notice the percentage of stocks above mid Bollinger Band 1 week ago. It was 82%. That was a clearly bullish market. And in fact, if you remember the video or if you would like to watch it back, at that time I looked at the 1 month to 1 day sector industry stock breadth, and without any ambiguity, without any second thought, I mentioned this, that it was so bullish, it was looking overbought. It was bullish. 82% of stocks above were above mid Bollinger Band. And what is that percentage today? 46%. So from overbought, not only it reduced the overbought condition, in fact it turned bearish, because more than 54 to be precise percentage of stocks are below mid Bollinger Band, that is bearish. Now on Friday, market tried to go up and it did a spectacular job in doing that. But was it really spectacular? If we looked at the market ETFs, we would think it was spectacular. If you look at the sector industry stock advance decline on Friday, it was still bullish, not spectacularly bullish. 66% stocks were up, about two-thirds, right? It's not so spectacularly bullish, but it was clearly bullish on Friday, but not bullish enough. Not bullish enough for what? Not enough even to turn 2 day performance to bullish. Only Friday was bullish, but that was not enough even to turn 2 day performance to bullish. It remained bearish, and of course the 5-day performance remained very bearish. Remember this picture again from last week, it was all green, so green that I mentioned it was too bullish to be overbought. And now from the very bullish market, we have 91% of sectors down for the week, 86% of industries down for the week, almost 80% stocks down for the week. That's a very strong pullback. That is not visible from the market ETFs. The week was so bearish that even 10-day turned bearish. 1 month is still bullish, but much less bullish than it was 1 week ago. I mentioned in a few tweets last week, I think, that in trading, like in life, in many cases, it is more important to know where something is going. Let's say a ball is going, a soccer ball maybe. Not so important to know where it is now. We have to know where the ball is going, whether it is cricket or soccer or any other game like that. We have to know where the ball is going if we have any chance of catching it. Knowing where it is now is nice to know, but it's not useful. Same in trading, knowing where the market is, like 1 week ago it was very bullish, was not of much use, because if you kept on buying stocks, you probably made a nice loss this week. It was more important to know where it was likely, more likely to go, not certain, but more likely to go. That was in the bearish direction. Why? Because the bucket analysis said that likelihood was more for a pullback, and that's why last week most of my trade ideas that I shared were on the bearish side. And that is how we build confidence on a system and a technique. Trust the signals, objective signals, ignore the media commentators saying one day why market should go up, another day why market should come down. They always do that after the market moves happen. Not of much use, but I could use the objective analysis to switch my stance to bearish stance. It's looking very bearish for sector, industry, stock, breadth. What about technical breadth? Very important to know the technical breadth, because in directional trading, most of us are doing directional trading, whether using stocks or futures or options. Sometimes we may do non-directional using options, but most of the trades tend to be directional for most of us. And for that, it is very important to know the technical breadth, because buying stocks, we can only make money if the stock moves in our direction. Technical analysis helps identifying the direction, whether we buy or short. How is the technical breadth on Friday? Daily technical breadth is very bullish. All signals, trend continuation, reversal, everything is bullish. But that should not fool us. One day is bullish, however, the longer term interval is always more important in trading. The actual entry is done using daily time frame, but the direction is better decided in line with the weekly interval. Not only weekly, we have to look at the trade setup in daily, but it is very important to look at the weekly. And how is the weekly today? Weekly is very bearish. All setups 83%, strength setups 77%, trend continuation 82%, reversal 96. Very high bearishness in the weekly, and on top of that, this is one signal I never ignore. When the percentage of bearish headwinds in the longer term weekly interval crosses a certain threshold, that is 1%, this cell lights up. That is a warning that market may have more pullback ahead. And again, these signals, the headwinds, come right at the top of a move. I never ignored them. So looking at the weekly technical breadth, weekly sector industry stock breadth, though Friday looked like a bullish day, I have no reason to switch my stance to bullish stance. What is the signal from market breadth? Okay, before that I have dollar index here. It's always nice to look back, and that gives us confidence on the system and technique. 1 week ago we were here in dollar index. We were here in daily. And I mentioned looking at the cluster of indecision in daily, bearish cluster, that I was not going to buy. At the same time, at that time, there was a resistance in weekly, and I said I was not going to, I was not going to buy, and I was not going to short, not resistance. Looking at the weekly bullishness, I said I was not going to short. So I was indecisive on dollar index 1 week ago. And the same view I am having this week also. The weekly candle is indecisive. It in fact has a bearish indecision at the top, not a cluster, but bearish indecision. So that is not allowing me to buy. And daily has a trend line support right below Friday's close, that is not allowing me to short. So when I combine weekly daily, I cannot buy, I cannot short, so it is indecisive. In fact, for last 3 weeks, if you notice, dollar is almost at the same price level. If I could be more accurate in drawing the line, almost unchanged at the close for last 3 weeks. That is significant indecision, and I guess unless that indecision is cleared in either upside or downside, the market may also have some indecision. Having said that, for several market recaps, I mentioned that we will need to see some trend lines to be broken, supports to be broken for me to be bearish. And let's look at the market internal health. Let me straight away go to weekly daily to see the trend lines. And indeed, the weekly trend line support is broken. What I have been mentioning for all these times, that because the support is holding so well, every time it goes to the precise support level, it goes up time and time and time and time and time and time, many times. I was of the view that once the trend line support is broken, that will also be significant. Now we do have a broken trend line support now. However, the however comes from the lower tail. It is not a completely bearish shape candle. It is very indecisive shape candle. If it closed with a bearish shape candle, I would be wholeheartedly bearish in terms of my swing trading for now. Swing trading, remember, longer term trend in weekly of course is going to take time to change from uptrend to downtrend, but I'm doing short term swing trading. If the weekly candle was bearish shape, I would have been fully bearish now for swing trading, but that is not the case. It has a nice lower tail that is caused by Friday's move. If next week price can breach Thursday's low, this is the total view index, that is if it can breach the low of the week, then I will turn bearish again, start taking bearish trades again. This is market breadth total view weekly daily. How about the breadth signals themselves? This week, once again, remember this is what we saw last week. 1 Hindenburg, 2 Bango, thanks to Mr. Ian Woodward, may him rest in peace, irrational exuberance. That was 1 week ago. This week we had one Phoenix. That is a bearish breadth signal. Again, thanks to Mr. Ian Woodward. May him rest in peace. And again, two more Hindenburgs. Hindenburgs everywhere. And that is also a good observation and learning that Hindenburg does not mean the market will drop immediately. It is a cautionary signal. The irrational exuberance are cautionary signals. That does not mean market will come down immediately. On the other hand, signals like bucket analysis being overbought, like I mentioned in the last week's market recap, those are immediately actionable. Those are not warning signals, those are actually directional preferences. Once they come, once bucket analysis shows it is overbought, it works like a clockwork almost, that we can actually start to take short trades. And Hindenburgs are warnings, Bangos are warnings, we get ready for a somewhat and sometimes a major market pullback that has not happened yet. It is overdue. The two Hindenburgs, one Phoenix, and by the way, the Phoenix is coming after a long time. We had a lot of irrational exuberance. We had many Hindenburgs, professionals selling, retails buying. We did not have a Phoenix, that is the magenta color candle, since a long time. That was only in January. Early January, we had some Phoenix, and now we have Phoenix only in April, early April. So I kept note of that. If we look at 3-month new high low, it is after a long time. How long? This long. It is now in the bearish territory. Not very bearish, not certainly oversold, but it is not in the upper half anymore, upper half of this middle threshold. It changed to the lower threshold. That is also a bearish sign. And of course, the percentage of stocks above 50-day moving average that never recovered, though market was going up, the breadth was weak all along. Now we see more weakness. Growth versus value. Growths are not doing well. Growth is underperforming, not a sign of a bullish market. Small cap versus large cap. Overall, small caps are slightly coming down. So can slim strike traders, small cap growth traders, they are not doing well. But I am not favoring any growth or value or small cap, large cap. I trade anything that I get so long as I can align the forces from multiple dimensions. In any case, the breadth signals are saying that the cautions are, those signals are continuing. Okay, so we have nothing to be bullish so far in spite of Friday's market being bullish. How bullish? Friday, if we look here, it was surprisingly bullish. For QQQ, it was up by 1.2%. And why surprising? QQQ can sometimes go up by 2% also. So why 1.2% up move of Friday was surprising? That was because on Thursday, okay, let's change to QQQ. On Thursday, QQQ had a huge drop. And that drop on QQQ on Thursday felt even more bearish, and it was in fact even more bearish because it opened with a sizable gap up and sharply came down. That created a reversal candle at price extreme high. Price extreme high signal is useful, reversal signal is useful, but the pair is even more potent. So when we have a reversal at price extreme high, that is a more potent bearish signal than just a reversal anywhere else. And because of that sharp reversal on Thursday, Friday's up move of 1.2% looked huge. though Friday also did not close with a bullish shape candle, and as is often the case, and see how beautifully technical analysis, especially the Q systems technical analysis works out. When a trend line support is broken, which was broken by QQQ on Thursday, it is often the case that price tries to go up to which level? That same broken trend line support level, and fails to go up from there. That is often the case, and QQQ gave us a textbook example of that. It tried to go up, stopped right at the trend line that is now broken. And in fact, if you were day trading, I'm not day trading, I'm not a day trader, but if you are trading intraday trades, either using QQQ or the futures NQ or options on any of them, you could precisely time it to take a short trade on QQQ. Right when it went to the trend line support and reverse from there. If you look at the weekly now, isn't it interesting how the signals play out? The very unique bearish headwind reversal. Now we look back, now we see the value, it came right at the top. That high, the watermark created by that bearish headwind, was never breached. And now you see, I started shorting QQQ. I don't remember, maybe somewhere here. I mentioned it publicly. When it went here, I again mentioned it publicly that the stop was not hit. So I was holding all the bearish positions on QQQ. How could I do that in spite of this move up? Because I have confidence on the systems and the techniques, and the stop was of course not hit. And some of my positions, again I publicly mentioned before knowing the results, one of them was using vertical, so I was not going to get stopped out anyway. One was short put on SQQQ, inverse ETF of QQQ. I was not going to stop out of that because short put, naked short put I was going to hold. Only I had also a long SQQQ position that I could stop out if the stop was hit, but the stop was not hit. And very nice for me, price came down. Do I have any reason to be bullish? No. This Friday's up move going up and stopping right at the trend line support is something that is expected. The weekly is indecisive, so it's not bearish, but the fact that trend line support is broken does not make me bullish either. Backdrop color is not green, magenta, so there is no bullishness as far as swing trading is concerned in QQQ. And again, if you look back, my timing was slightly ahead of others based on proper analysis, not arbitrary shorting QQQ, but that is playing out all right. Actually, I want to go back to QQQ. Yes, Friday it went up, but I would like to look at the intraday chart. Intraday pivot chart of QQQ, 5-minute interval, Thursday's open, well above Wednesday's high, creating a gap up open, sharp drop, well below Wednesday's low, creating a reversal candle. And then on Friday, it went up. It went up. Even on intraday time frame, the bearish headwinds gave very useful signals. This bullish headwind also. They are not trade setups, but they alerted us that something could happen. In any case, what I wanted to see and show on this intraday chart is that see the volume with which it fell on Thursday. See the volume with which it went up in this period on Friday. And after that it was mixed picture. The rally in QQQ on Friday happened in the morning session, and that volume was very feeble compared to the very high selling of Thursday. That is not making me any bullish. The more you study the charts on different time frames, you get to know what is really going on from the color coded signals. What about SPY? I came to the daily chart, which has the historical trend lines. Remember, in the last several market recaps, I was saying that I need to see some of these trend lines to be broken. QQQ trend line support broken. SPY was also broken on Thursday. Go back to weekly daily. The bearish headwind at the top was useful alert. Weekly is now backdrop bearish color. However, the lower candle tail created by Thursday's move is making me wait to see if Friday's low, that is weekly low, can be breached next week. Then I will start taking bearish trades more wholeheartedly. Now I am not bullish, but I am not going to take many bearish trades right now because of this indecision. DIA. DIA is the weakest of the market ETFs currently. We can see that from the relative performance tilting down. Once again, the bearish headwind was useful in daily, and we have a bearish headwind in weekly now. Here, the lower tail in weekly is less pronounced. Here in daily, after the trend line support was broken on Thursday, Friday's high could not really go to the trend line support again. That was true for QQQ, but not for DIA. So DIA is also weaker on a more granular level on Thursday's, Friday's move. Also, I have many signals available in Q, including the finder or price performance. I have put all the market ETFs here. I have used a daily time frame. Friday's move is bullish, but a large number of days prior to that was bearish. In fact, until 11 periods, that is 11 days before Friday, whether we looked at 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, 8 day, 9 day, 10 day period. So if we leave 1 day period from 2 to 10 day, all these periods are now actually bearish. Just 1 day's bullish move does not make the market bullish. We have previous 10 periods bearish now, not making me any bullish when I look at that. And I wanted to show another thing. If I change the interval to monthly, we were seeing on the charts that DIA was weaker, and now we can see here DIA is the only one that is now weak in the current month, bearish, weak meaning bearish, and also it was down in the previous month also. So from different angles we can see that DIA is the weakest now. The only market ETF that is down 1 month ago also, not only in the current month of April, in March also it is down. Nice insights, no? And then we could drill down into industrial stocks using Q index and look to short. And small caps, IWM. Interestingly, this is the only market ETF that did not break the trend line support. Neither did it break on Thursday, precisely stopped at the trend line support on Thursday, and Friday tried to go down but closed above it. That is the only market ETF holding above trend line support. Interestingly, the bearish headwind here was effective. By the way, weekly has a bearish headwind, and also what did I mention without ambiguity 1 week ago when we were here? I noticed that, and this is exactly what I mentioned in the last market recap, that we had a bearish headwind that created a watermark resistance. That bearish headwind was successful in pulling down price, and 1 week ago exactly on this day I mentioned that though it was closing higher, the indecision at the top, bearish indecision, bearish shape happening at bearish headwind level, creating a false upside breakout. Exactly this is what I mentioned, that if next day price goes down, I was looking to short. And if you did that, you would end up with a very nice profit in IWM, be it the futures, RTY, IWM, or some options trade on any of them. Once again, I could anticipate a move and got ready with that, publicly announced that, and once again that worked out beautifully. That is how you build confidence on a system, not telling what the market is doing after it has done, but anticipating something, publicly announcing a trading opportunity and seeing that it is playing out like that. We don't have to have every trade profitable. If majority of trades are profitable, we can make a significant amount of money from the market. IWM stopped above trend line support. Is it making me bullish? No, because as I mentioned just a while ago, the weekly is very important. The weekly is very bearish in shape. In spite of having a small lower tail, why I say small, relative to the size of the body, it's small. So overall the shape is bearish, and we have a bearish headwind at the very top. We also have a bear release. Backdrop color is bearish. It's not allowing me to buy IWM by any means. Not for swing trading at least. For day trading, one could try to take a bullish trade next week, maybe Monday, if we see prices stopping at the trend line support and going up. But that is intraday trading. I don't discuss intraday trading much in these videos. For swing trading, looking at weekly daily, there is no scope of taking bullish trades in IWM as well. So far, I have not seen anything to say that it's time to go for bullish trades. Now, having said that, I did mention some bullish trades recently, but they were, if you remember, high dividend yield stocks. One was NEP. This is one I shared in the last market recap, about 10%, I think, dividend yield. We could check that out again from QVital. I'll come back to QVital. So it is holding on to the price level. If we look at weekly daily, it is holding on to the price level. It has a trend line support. In fact, last week when I shared the idea, we were here, and I did mention one thing, that if it was not a high dividend yield stock, I was not going to buy it because the stop would be far away. But because it was high dividend yield, I was going to hold it anyway. Even if price came down, I was not going to apply a stop like I do for non-dividend yield stocks. So I was okay to buy it at this point. Just 1 week ago, I had a long position. I'm continuing to hold the long position. Didn't change much, and yes, it was and is a very high dividend yield stock. 12% dividend yield at present. It's an utility stock, that is a defensive stock, and I found it using real-time analysis last week, undervalued with high earnings growth with a short squeeze potential. Insiders were buying, 12% dividend yield. Those were reasons for me to buy. and I'm continuing to hold that position. I have a stock long position. It's a high dividend yield stock. I'm going to hold it. I'm not going to worry about stop loss. Prior to NEP, the last long position that I discussed, and I discussed that long position two times. GRFS. And what is beautiful about these entries in all these stocks is for GRFS, for example, just like NEP, I identified the stock here one of these days before this up move, which was almost a 10% up move. And I explained that because the stop loss was narrow, we could book partial profit. That is my usual technique. Place a GTC order at the initial profit level, which is around the same level as the risk distance from entry, at least exit partial position. And then when price came here, I mentioned that if price went up, I think I had a market recap right on this day, and I mentioned I did not take a long position again, but if it continued to go up, I would buy again, and I did buy again. That position had, in fact, on Thursday, it had more than 10% profit again, and again, I closed at least partial position. The basis is very simple for me. My risk was only this much. So anywhere above my risk distance is my initial profit target. But I also mentioned in the previous market recap that because it came down but held the trend line support beautifully, I'm expecting it to go above this high. So I was waiting for that. In fact, on Thursday, when I saw it tried to go up, but it was coming down, and I had more than 10% profit, I booked at least partial profit in the trade. So yes, I took some long trades, but they were an NEP. I'm still holding NEP. I'm holding full position. They are in high dividend yield stocks. WMT was a stock I discussed as a bearish trade in the last market recap. This week it came down. Backdrop color turned bearish. So it has a small profit, and the trade would have been taken using short call vertical. So we would profit not only from the price move down. Once again, the bearish headwinds were nice alerts. I discussed the trade right on this day. 3, 4, 5. 1, 2, 3, 4, 5. Yes, this was last Friday. I discussed it in that market recap. I remember I saved it here. So the WMT short trade from last week is also working fine. That is the way to build confidence on a system. Publicly announce the trades, publicly take the trades, and then, okay, not publicly take, private, take the trades in your own account, my account, and then see how they are playing out. Always manage risk. So my trades are doing all right, which means really is that the visual analysis, multidimensional analysis, 360 degrees analysis using very robust data from Refinitiv is working pretty well. In whatever be the market condition, and whether I am taking longs or shorts, the 360 degrees analysis are working in current market as well. Now I have no reason to look for bullish trades, but there may be some high dividend yield stocks, isn't it? Let's look at QFinder. I have some time. The weekly actually is not giving me any reason to look for bullish trades. But let's see if I can find some high dividend yield stocks. In the current market, I am not going to buy high growth stocks. 185 stocks gave possible buy setups on Friday. But I'm not going to look at 185 stocks. I'm going to carry out a fundamental scorecard analysis. That way I'm doing bottom-up analysis using live systems now, from technicals going to fundamentals. And because I'm not keen to share any long or short idea in either direction anyway, I may spend some time on other things explaining different techniques. One is to look at 185 stocks, their fundamentals, look at their industry, find trades from there. Another thing that I often do, and my Excel seems to be hanging. Okay, not really. Okay, so let it generate the scorecard. Let me come back to another technique. Another technique is using this very useful column. Why I say very useful? Because this is not only valuable for swing trading, extremely valuable for longer term investment. Buy low, true buy low, and if you are open to shorts, truly short high. Click the paint bar, red color shows the stocks that are at price extreme low. Those are lucrative buying opportunities, not only for swing trading, but possible long-term investment if their fundamentals are strong. So I could go back to fundamentals. Anyway, I'm calculating the scorecard in parallel for all those 185 stocks. The other way could be that instead of going to fundamentals, look for stocks that are breaking out from price extreme low. Only 6, right? Only 6. And look at their additional momentum signals. We had flow signals in 2 of them, and I can see we also have MOBO breakout from a squeeze. Some squeeze, not a lot of MOBO breakout, squeeze Kahuna. So I go back. I have 6 breakouts. One way could be just to open these 6 stocks. They are breaking out from low price level, and if they are attractive on the charts, I could then look at fundamentals. Both are possible. So what it really means is that we have a way to analyze fundamentals, another way to analyze technicals, third way to analyze sector industry score. For swing trading, I look at the industry scores. Whichever order we perform them, we end up with the same trades. 360-degree trades, all factors are aligned. This stock is attractive, LBTYK, Liberty Global. I think it is a defensive stock. Why I say it is attractive, I have not opened the weekly yet, but I see it has a very long term daily support. Congestion went up from the same long term support, again somewhat congestion, broke one trend line support. I need to see the next trend line not very far away, that to be broken before buying. And if I came here, why not I look at it using weekly daily. That's nice. Beautiful charts, isn't it? Even longer term support in weekly. Both are equally long in length, but one is weekly, one is daily. Very long term support. Beautiful bounce up from weekly, has a cluster of bullish indecision in weekly. Daily, one breakout is successful, another is there. So now it should be a good time to look at Liberty Global's fundamentals. I already generated the scorecard of all those stocks. Let me just filter for that. Yes, there. Liberty Global, LBTYA, I think AA shares. Undervalued stock. And interestingly, earnings growth reversed from negative to positive in the last quarter. As I many times mentioned, Q techniques, if we are using Q techniques, we don't have to wait for high earnings growth. This massive reversal from large negative earnings growth to small but positive earnings growth is good enough reason to start to accumulate the stock. So earnings growth is improving a lot. nice valuation, but I will wait for the next trend line resistance to be broken. But also I would like to see its industry score, and then I will make a final comment on that stock. LBTYA. Oh, okay. Alternate. The moment I see the industry score, it's not giving me any confidence. And can LBTYA go up? Yes, the chart is looking quite good, but I don't buy only based on chart strength because I have all the signals available. And if the industry score is like this, I'm not willing to buy. But this may change next week. Why I say it may change? See, it was very weak. This is matching the pattern in the chart. I can see the score is improving, showing some acceleration. If this is a defensive player, alternative carriers, if the market is weak, maybe the defensive stocks will do better. Maybe this will go up, then the industry will accelerate. That may be the time to buy, and that may coincide with this next trend line resistance breakout. See, all these are possibilities. Just like for IWM in the last market recap, when price closed higher on Friday 1 week ago, but it already created a false upside breakout. The possibility was in favor of taking a short trade right on Monday. That played out beautifully. And what I discussed in LB2IA, its industry score, these are all possibilities and it may play out beautifully. And that will be the time I buy the stock, not now. And the final comment I wanted to make, when I looked at the stock, its dividend yield is not high. So I'm not keen to buy this stock. So when I said that, now I move to the alternative approach. Instead of looking at the breakout stocks, I'm not going to look at the other stocks. Not keen to share trading ideas in this recap, but let's discuss the techniques. One was to look at the breakouts from low price level from Q Finder. Another one that I am more interested to look at if I wanted to buy any stock was to look at the high dividend yield stocks. With the current interest rate environment, let's say anything above 8%. 7 could also be okay. Let's choose anything above 7%. First thing I want to see is their industry score. One click. I have two industries that are strong. These two. I could also see sign of acceleration in these two. So let me choose these several industries. I'm left with these few stocks with at least 7% dividend yield. Click on Finder again. These are the stocks. From 185, I came down to 8 stocks very easily. What are these 8 stocks? Very high dividend yield, very high, 7% plus in strong or somewhat accelerating industries, and all having some technical setup, all flow setups in fact. And the top stock is one I already discussed, GRFS. So I'm not going to buy it right now. Already discussed 2 times in previous weeks. Traded it, made a nice profit. Let's look at the other stocks. So that TradeStation does not feel bad. Let's use TradeStation for a while. HTGC, Hercules Cap. It's a high dividend yield stock, but it is at a too high price level for me to consider buying it. When I'm looking for high dividend yield stocks, I'm also looking for stocks at a relatively lower price level. Let's go to the next one, FSK. This is looking better, but it has a flow setup in daily. That's how I found it from Finder, but when I apply the checklist conditions, the weekly is not meeting the checklist conditions for flow, so I'll not trade that now. Next one, ARCC, too high a price level for me to buy a dividend yield stocks. Next one, PFLT, This is looking better. This has a bullish flow in daily. The weekly is not meeting the checklist conditions, but it is also at trend line support, has a high dividend yield, has a bullish headwind at the exact same level. Here the watermark level that is holding nicely. Now it has a trend line support, is in a congestion area. The price seems to be holding. It's a high dividend yield. Let's find out the exact dividend percentage now. PFLT. PFLT. Let's create a one-page scorecard now. Now is the time, the final step. Look at its one-page scorecard also before clicking the buy button on the brokerage. Everything is on the tabular format also, but it just makes it more visual on the one-page scorecard. Takes a few more seconds, so I have no qualms using that. Beautiful, isn't it? The one-page scorecard. There is no reason not to buy this stock now that I look at it, and also see my way of trading, whatever be the market condition. And I am not very bullish on the market, but still I try to find a bullish stock. If I went to look for bearish stocks, I think I could find many. And this single page scorecard is beautiful. 10.9% dividend yield, undervalued stock, some earnings growth, some revenue growth, best possible fund accumulation score. Insiders are buying. I don't pay much weightage to analyst score, that is bullish. Has a short squeeze potential. 84% stocks went up. And now if I go back to the scorecard again for industry, for this specific stock, it is improving, asset management and custody banks. So going back to the stock, because it is high dividend yield at a low price level, beautiful fundamentals with fund accumulation, I would not mind buying this stock. So today's buy stock, let me list it here. PF, let me remember the stock. PFLT. Because it is high dividend yield, I would not like to put a stop on the position. If I buy it, I may just hold it even if it goes down. So that is how I find stocks exactly at 1 hour point. I was not going to look for many stocks anyway. Those are the days I spend more time on techniques. I shared some techniques, and when I did that, let me do the third way also, that is top down. I'll not spend much time on that though. Let's go to the industries, not that button, not alternate industry. Go to the industry scores. Not that I could not do with alternate industry score, but I usually prefer the industry scores. They are more granular. Let's look at the bottom 20%. The worst performing industries. Let's look at the S&P 1500 stocks. Find at least 1 star bearish fundamental stock. What is 1 star? Either overvalued or negative earnings growth. I have 77 stocks. So from S&P 1500 stocks, immediately I came to only 77. What are these stocks? They are in the weakest industries, bottom 20%, and fundamentally weak also. Let's look at their technicals. Bearish signals. Look for trade setups. None, right? That is expected. That is expected because Friday was a bullish day. So these few stocks did not have any bearish setup on Friday. Friday was a bullish day. But if I look at the bearish weekly, let's see if any of them are touching trendline resistance. 9 of them are actually touching trendline resistance. Why not I look at them? What are these 9 stocks? They are in weakest industries, weak fundamentals. And on Friday, they don't have a bearish setup, but they are touching weekly trend line resistance. So many things you can do. I can do using Q. Nike. That's a nice stock. Let's look at it. No, that one, not the. Let me. Something is not right. Maybe on the scan result is not up to date, or maybe Nike some trend line resistance is there. It's not showing. Let's look at this. WEC has trend line resistance in weekly, but near trend line support, not going to short. WPC has trend line resistance but has a trend line support also in weekly. I'm looking at stocks near trend line resistance, touching trend line resistance in weekly. This also doesn't have a short setup. Next one, SRE. Very nice. Weekly has trend line resistance. That is what I looked for, but daily has trend line support. Cannot short. ED. Weekly has trend line resistance. That is what I looked for. Weak fundamental, weak industry, but daily doesn't allow me to short. HRL. This one is better. We keep at it, we'll find some stock that is more interesting than others for shorting also. But let me finish the few other stocks. HSY, no, has a trend line support in daily. Next one, NJR. Weekly has trend line resistance. Daily does not allow shorting. Last one, PARA, PARA. Weekly trend line resistance. Daily has no short setup. So we are left with HRL. So now it's time to go back to HRL's one-page fundamental scorecard. See, the bullish stocks fundamental scorecard look like this. How will be the scorecard for HRL? Let's find out. We know it is one-star bearish candidate. Let's see the one-page scorecard. See the difference. The bullish candidate had heavy fund accumulation, but here is neutral. That stock was undervalued. This is overvalued. Some earnings growth, but not enough. Some dividend yield, but less than what banks may be paying now. And while the percentage of peer stocks were much higher in the buy candidate, here it is down 56. Majority of peer stocks went down, though the day was very bullish. It's a consumer staple stock. Look at the industry scorecard again. That makes me wait for a while. The industry is very weak, allows me to short. Industry is very weak, fundamentals weak enough. But why it made me stop is because it is a consumer staple stock. If the market comes down, consumer staples may do better, and I have that understanding of the market. Not that this particular stock will do better, but overall consumer staples are defensive category stocks. I am not going to short a defensive category stock when I think the market may come down. So I didn't in this list find any short candidate, and that was not unexpected. Of course, there are many more stocks left. Just looked at some of them. If short candidates are there, I'll find them in real time on Monday if the market starts to come down again. For now, in such a market, I actually found a buy candidate. I would not mind buying it on Monday. It's a high dividend yield stock. Of course, on Monday, if it gaps down 10%, I'll not buy, but I doubt it will do like that. PFLT is my stock of interest in today's market recap. That's the end of the live analysis today. Thanks a lot for joining. Always a pleasure to have you with me on these weekend sessions. Have a great weekend. See you next week, most likely. And as I always say, there is no reason not to do that. Trade profitably. Thank you.